We got the long-term perspective as the daily time frame. Okay, so we will look for the daily FEG, internal to external and external to internal. Okay, and we switch to the H1 time frame, which is the intermediate term perspective, and we look for the change in the state of delivery and H1 LTP aligned ITP key level. Okay, and we switch to the lower time frame, which is the M5. Okay, the short-term perspective. We look for the change in the state of delivery, and that's the entry point. All right, so here we got the Nasdaq chart here. Okay, so SMT at the highs. All right, so we got the daily key level here, and it is the drawn liquidity. Right, so now we are on the H4 time frame. Just look at this. We have this range high, and look at the smooth edges here. Right, so premium versus discount. So for our FEG also. Right, so external to internal, internal to external, and yes, we got the sweep here. We got the swing point. So we can just focus on this open high, low close of this H4 candles, right? So we are on the H1 chart here. It took the range high here, right? And every time Nasdaq creates the smooth edges, it just goes to that, okay? Every single time you will be having 100% strike rate, 90 to 100%, okay? If you just add the smooth edges, just go and reverse engineer the trades, all right? Yes, this is a 5-minute time frame. Daily candle opened up here, right? So into the H1 and 4-hour FEG. So already we got the daily H4 as a LTP here. Okay, so we can frame both sides, right? So this is extremely high probable trade, okay? It's very high probable. And yes, it took the high here, right? So manipulation above the midnight opening price, right? Range high. And yes, another example on Nasdaq. So this is a 4-hour dealing range, right? And we got the 4-hour FEG external to internal. Okay, so we got the swing point here. It just closed inside. This candle just closed below here, right? And we got the SMT, okay, with ES. And look at this candle. It just opened up. It swept every session liquidities and just gone into the 4-hour FEG. Okay, so external to internal on the 4-hour time frame. And in the H1, you can clearly see that it has the swing point, right? So this is a stop hunt and relative equal lows. What did I just say the last time on the example? It goes to the relative equal lows, right? Every single time. Nasdaq does this, okay? And yes, H1 FEG, premium fair value gap. And that is this tiny stop hunt. It just made a massive move downwards, okay? So we got the swing point. Look at this. This candle just opened up, created a high, made a reversal candle here, right? And this 9 a.m. candle opened up, created a high, and just gone to the lows. Okay, that's how you trade this. And now we are in the 15-minute time frame. Clearly, we can see that it has the stop hunt here, right? Yes, look at this accumulation, manipulation, distribution. So this is already in the distribution at this point. Okay. All right, so we are on the 5-minute time frame. Look at this 9 a.m. candle. It just opened up, created a high into a PDRS, okay, premium PDRS above the opening price, right? So it's very premium. And yes, this low, like look at this low, and this low. And we got this FEG here, discounted FEG. We can just target, like, you know, it will be the TP. So we got the gold chart here, right? We are on the daily time frame. So we have SMT at the highs, right? So if I just map out the premium as a discount, so this price is premium, right? It closed inside, closure below. This is a daily premium fair value gap, and then this order block, right? So now we can just focus on this open high, low close of a daily candle. So what is the low intermediate time frame for the daily? It is the H1, right? So yes, of course, we just need to combine the H4 also. Like, look at this. Just remember the Blitz model from the previous video, and yes, remember from the MMX and Traders Blitz model video, we got to focus on the one H4 candle, right? SMT at the highs with silver, it just made a swing point, right? Closure below. And now we can focus on this open high, low close of this 4-hour candle, 2 a.m., right? So relative equal lows, very easy to target. And now we are on the H1 time frame. Like, look at this. The daily candle just opened up, created a high, SMT with silver. Okay. It just failed to give a change in the state of delivery. Like, look at this. Failure to give a change in the state of delivery, which means the possibility of the price going to this low is very, it will happen, right? The probabilities. Just you got to play the high probability trades. That's it. So within that 4-hour candle, we need previous H1 candle, right? And this is the H1 FEG2. And we have SMT at this H1 FEG with silver, right? Relative equal lows again, previous day low. So we got to go to the short-term perspective. Look at this, SMT at the highs, clean change in the state of delivery structure. Like this is how you should be avoiding the pattern. Like, look at this. This 2 a.m. candle opened up, created a low, right? And it just made a stop hunt or whatever. And it just gone below the daily opening price. Everyone will be thinking that, okay, fine. This is going to be the accumulation, manipulation, distribution to the highs. But you need context, okay? You need the high probability context. You need candle closure, premium versus discount, and everything. That's why. So now we know that this is going to be the price action that goes to the lows, right? Previously low, relative equal lows again. Okay, so like look at this. So change in the state of delivery, auto block. That's it. That's the trade here. Okay. So we are on the dollar index here. Okay, DXY. Weekly time frame. So it took the external range high, SMT with the Euro USD. All right. So after external range liquidity, you gotta go to the internal range, right? So we got this internal range liquidity as a drawn liquidity. So we are on the 4-hour time frame. So we have this FEG here, right? So premium versus discount for our FEG SMT with the GBP USD. And yes, it gotta go to the lows. We are on the Euro USD chart here, premium versus discount. Okay, so H4 internal range liquidity, right? And it just took the low here. Like, look at this candle low. Tiny little stop hunt, right? It just closed above, making a reversal here, right? SMT with GBP USD. Like, look at this. This candle swept the previous candle low, closed above, right? Now we can focus on this open low high close of this 4-hour candle. So 15-minute time frame. Look at this. Distribution to the highs. Okay. M15 FEG. Yeah. Since this is Forex, we can just execute on the 15-minute time frame. Okay. So we don't need to go to the lower time frame because the lower time frame will be very choppy on the Forex. You don't need to trade the lower time frame, like 1 minute, 5 minute. If we just know the 15-minute, okay, and 15-minute is clean, and we are already on the distribution, we can trade the 15-minute directly. Okay. That's the trade there on the Euro USD. Okay. Now we got the gold example here. Okay. So look at this. We got the daily FEG, SMT with silver, right? It just took the previous day low. Now we got to go to the 4-hour time frame. Like, look at this. Previous day low. This candle swept the lows here, made an SMT, closed above, right? And yes, we do got, look at this. We do got this daily FEG here, which is a previous day high. So this could be the external to internal on the long-term perspective, right? And in intermediate term perspective, we just need H1 and H4 to align, okay? So here on the M5 chart, okay? This is the H1 internal range liquidity. So within that 4-hour candle, look at this. This H4 candle had an H1 FEG here, and then the 15-minute stop hunt, okay? And then we have this SMT, change in the state of delivery on the 5-minute, right? The double purge from the MMXM trader, premium fair value gap as the target. That's it. It just made a beautiful distribution to the highs. That's how you just combine everything and just really, pushing yourself into the distribution trades. Okay, this is very high probability setup and high probability approach I just really taught you. Okay. Yes, that's it. See you in the next video.